Hello there and welcome back to Cybos TV with me, Daisy McAndrew. Thank you very much for joining us. Now for our next session we're answering some very important questions. Just how resilient is the market? And if it isn't resilient, why not? And what can we do to make it stronger? To answer all those questions and more and to discuss this subject with me, I'm delighted to be joined on my immediate left. Good morning to you, Bernie Kennedy from LME Clear. Klaus Lober, good morning to you, Head of CPSS Secretariat at BIS. Donna Milrod to Klaus's left, good morning and welcome from DTCC. And finally, Phil Kenworthy, good morning, Phil, from Chaps Clearing. Well, welcome to you all. Big questions to be answered. I know you had a very successful session discussing this issue yesterday here at Cybos. Klaus, maybe I can come to you first just to answer the big question. What is going on with resiliency? How strong are we?
Thank you very much. Actually, taking a global regulatory perspective, and my committee, which is now called Committee on Payments and Market Infrastructure, CPMI, we have changed names quite recently from CPSS.
Apologies.
Is actually looking at the safety and efficiency of financial market infrastructure. Our aim is global financial stability, and as part of that, the resilience of systemically relevant market infrastructures is key. So we have a long tradition working together with the securities regulators, with IOSCO, in setting global standards to make sure that the variety of types of market infrastructures are safe and resilient. The most recent emanation of our work are the 2012 Principles for Financial Market Infrastructure. They embody a wide set of principles to be applied both by the infrastructures and the authorities that supervise and oversee them. And they are basically trying to set a benchmark for all types of risks that could arise, whether they are financial or non-financial, whether they are credit liquidity risk, whether they're general business risk, whether they're operational in all its emanations. We had yesterday quite interesting discussions on the varieties of operational risk, whether they are physical or whether they are logical. Again, the benchmark set by the principles has quite considerably, I would say, raised the bar compared to previous regulatory standards in that field. And we are witnessing now the implementation throughout the globe by authorities transposing the principles into their regulatory framework, but also by the infrastructures themselves to adapt their routes when necessary to aim to comply with those standards. It's a complex process, and to help ensuring completeness and consistency, we have actually embarked, like other standard-setting bodies, like the Basel Committee, in looking at what is being done, in assessing the implementation across the globe. We are looking currently at 28 jurisdictions. And what we witness is, more or less, over the last 12 years, there's a steep increase in the progress that has been made, both at the level of the authorities in adapting their rulebooks and at the level of the infrastructures themselves in adjusting their risk management. We are not yet fully there. And there's a wide diversity as to the degree of completeness, whether you look at specific types of infrastructures or whether you look at specific jurisdictions overall. But the trend is quite clear, and what we try to do is, by reaching out and discussing with the jurisdictions what is being done, to make sure that the overall aim, that is consistency of implementation, is being achieved.
So perhaps if we could term it in a sort of end-of-term report or a health check, on the whole, it's not a bad end-of-term report, but Bernie, I'm guessing some people would say it could do better, maybe.
I think we can always do better. There's now there's always been a regulatory structure in place, but it continues to improve in looking forward with what the new environment's bringing us. I think it was interesting, just referring back to yesterday, there was a potential view that said maybe FMIs aren't as resilient as they should be, and I think the real key point to make here is FMIs are the absolute focus of the regulator. There's a structure in place. We have jurisdictional and cross-jurisdictional issues that are being addressed. But if I look at ourselves, just last week we introduced LME Clear, a new clearinghouse for the London Metal Exchange. Our focus in building that clearinghouse wasn't on the BAU. We all know the BAU. It was actually on resiliency. That's what an FMI focuses on. And I think I can speak on behalf of every FMI and say that that's exactly what we need to do. That's our job. So we'll never be at nirvana. It's never going to happen. There are always risks. But I think as an FMI working with the regulators, that's exactly what we aim to achieve, is as good a place as you can be to protect the markets.
Such a big part of debt trap. You don't shout it from the heights, you don't shout it out from many rooftops, but it's absolutely core to the day-to-day workings of an FMI to be resilient. We've just introduced earlier this year tertiary resilience of data centers. It's not something you stick out in press releases all over the place. The bottom line is, in living memory, an FMI has not gone down. We mustn't be complacent, but it's a very strong infrastructure there. It's perhaps not as well known, but that's fine. But the bottom line is, it's safe and secure.
Donna, do you think Phil's got a point? Maybe FMIs are a bit backward in coming forward. Maybe you should be banging the drum and saying, actually, we haven't had the high-profile failures that other sectors have had, and we should be a bit more proud of our achievements.
Well, I have to say that, I mean, the industry knows that. We test all the time. We've lived through every single crisis and have been open for business every single day that we needed to be open. So I don't think that the industry has any false understanding of our resilience. The question is, how much are we doing for past issues versus the ones that are in front of us that we don't know about? We are wonderful risk managers. That's our raison d'etre, right? That's our job. That's what we get paid for, hopefully, and we do it well. So we need to really think about what's in front of us. And those are going to be very different. We don't know what they are. We talk a lot about cyber, but it's important to realize that what we've been testing for in the past and the way we're architected in the past, in some respects, has an inverse relationship to what we need to be organized for the issues of the future, especially around cyber. So we spent a lot of time on redundancy and resiliency and making sure we have replication in a cyber world that actually could hurt us if we're not careful.
Maybe if I can ask you all, is it cyber that keeps you awake at night? Is that top of the...
There are a number of risks out there, but cyber is obviously the current hot topic, but candidly, information security risks have been there since the computer was first invented. However, it's a much more accessible risk now, and it has much more PR around it. I think the key for us, and I think what came out in yesterday's discussion, is the need for ongoing collaboration. You can't just tackle these things in silos. You absolutely have to do it in a coordinated fashion, otherwise you do have then the weakest link in the chain. And we mustn't forget, the world's largest banks, those that are represented here this week, they all plug into us individually. There's a common set of customers, common set of participants, and actually it's essential we actually manage it in a coordinated fashion.
But I think that's a very interesting point, that we talk about FMIs, these infrastructures that exist. We exist for the market, to protect the market, but there's an awful lot outside of that circle that isn't regulated. They potentially look like an FMI, new payment systems, new infrastructures that everybody, the general public, are using. They're not regulated in the same way as an FMI. How do we address that? So that's something that, again, collaboration, and there is work going on across the industry trying to look at that and address those risks. Outside of that, again, I think you have a whole lot of technology vendors feeding in, and I'm talking about the commercial vendors on the street. Again, I don't mean to go back to my own recent experience, but the regulators looked at us and said, okay, without putting words in the regulator's mouth, you're doing all the right things. We can see that you've got all your policies and building blocks in place. But then a question mark to us. How about people outside of that are feeding in to the participants in your system? It's, well, we can only do so much. If you're really concerned about that, then shouldn't we be extending, and I'll be shocked for saying this, the regulatory net beyond that, beyond some other service providers? But I really do mean, the service providers beyond the general market infrastructure that we know and love.
I think collectively we view the regulations out there as a baseline. At the end of the day, it's the baseline de minimis, which we all have to achieve. The core principles published in 2012 are an absolute great foundation stone. But then as you say, we are systemic risk managers. Our responsibility is to continue to monitor what's going on out there and react to that. So therefore, that's the foundation. The foundations will be strengthened as time goes by, but it's down to us to understand the risks out there, react to them, and liaise with each other.
And I would just add to that our interests really need to be aligned. All the players need to be aligned, and not all the FMIs are organized in the same way. They're not governed in the same way. So I think the PMFIs have a real disclosure requirement that's actually quite useful in many respects. But in order to collaborate, we all need to be kind of walking in the same direction, and that's critically important. Now, I would say that there's plenty of examples where we can do that, and we have done that. The legal entity identifier work is a great example of that. There's collaboration around client data as well. That is a good example of that. And kind of the upcoming changes in Basel is requiring all this work around margin and margin transit and margin utilities. So I think there's wonderful examples of that, but collaboration among the FMIs is only one piece of it. We also need to collaborate with our regulators, and that's critically important too.
Definitely the collaboration with the regulators, but also Bernie's point about, if I may call them, the pseudo FMIs that are not, they're not the real thing. I mean, Klaus, what can be done about those organisations and those, operators in the market that some people will think do come under the regulation, but actually they don't?
I mean, just to complement the picture, it is perfectly evident, not just to the industry, that you cannot look at individual infrastructures in isolation. The standalone approach doesn't work. And already in the principles, this is clearly acknowledged that there is a need to look beyond, both on the side of the industry, to look at all those interconnectedness, whether it is service providers, whether it's major customers. The framework is there. What is expected from FMIs to understand the risk coming from there, but also what is expected from the side of the authorities to interact, to exchange information, to have a common perspective on similar risks, whether they are within regulated infrastructures, regulated other institutions, or non-regulated entities.
I think that the indirect space, you mentioned sort of alternative FMIs, you have a lot of FMIs potentially out there that come into any of these systems on an indirect basis, and certainly one of the key things we've been looking at over the last 18 months, 2 years, is actually to understand the liquidity impact. Everything at the end boils down to liquidity, whether it be in a CCP or a straightforward payment system, and it's still the same players out there, and they act as almost clearers on behalf of that indirect community. So I think what you're seeing is actually a reaching through the direct participation base at a risk management level to understand what are the source of those flows and actually just to get in there.
Well, I guess that's a really valid point, because that's exactly what FMIs, all of us, are doing. Is there was a time when you just looked at your direct participants. The world is changing, the regulation is changing, and we're not sitting here in a silo and saying we're just in this small little secure area. We're looking beyond that and saying, how do we manage that risk outside of that arena? And that's where all the collaboration does come into play.
So collaboration has been such a buzzword already throughout the whole of this conference, but I think, so to sort of sum up what you're saying, we're talking about more collaboration. What you'd like is less regulation in some ways, but the regulation to control more people to be brought under that umbrella, or more people to be controlled and regulated than currently are.
I think the point is that we have to take a system-wide view, both in regulation as well as the way we interact. I think that's really the point. There are plenty of players out there. There always will be. The industry is incredibly creative, as are the financial market infrastructures, and the threats are always changing. So the question is, do we have the right framework to be able to kind of work and manage and risk manage within that ever-changing environment? And I think we didn't spend enough time talking about it yesterday, but we should definitely mention is the cross-border collaboration, especially within the regulatory community. We've seen some examples of that's worked. We've seen real challenges that's been recognized by the regulatory community and the FSB in particular. So we need to kind of work through that to really make sure that we're looking at the real risks that are in the system.
That should be timely too, because you can do a lot of talking and actually the risk has already moved on. Yeah. And that's the key. I think I wouldn't say less regulation, it's perhaps more timely regulation. At the end of the day, our responsibility is to be systemic risk managers and within the boundaries of the regulation, but I think we also sort of want to set the pace for the regulation to adapt as well.
Well, ladies and gentlemen, thank you very, very much for talking us through. And I'm guessing that this time next year, you'll all be hoping that in some ways this conversation will have moved on, that there'll be acknowledgement that some of the regulation and the stress testing will have achieved a lot. But thank you so much for talking to me this morning. Bernie Kennedy, Klaus Lober, Donna Milrod, and Phil Kenworthy. Thank you to all of you. Well, we'll be back very soon. Do keep watching Cyber TV. I'm Daisy McAndrew. Thank you for joining me. Bye-bye.